about a minute or two ago, but I was having some technical difficulties. I had to cut that live stream and come back to this one. So today's topic, we're going to talk about what factors actually affect your credit score. Now, there are several key factors that actually do affect someone's credit score. It'll affect your credit score, and we need to be aware of these items that do have an effect on our credit score. There are several things that we need to talk about and think about whenever we are establishing our credit, trying to make sure we have good credit, maybe repairing bad credit in the past. We want to make sure that these items are going to be addressed. You want to make sure that you've addressed these items and that you're aware of these items because they're going to hold a key factor in your credit profile, and then not only that, your credit score, and which is also part of your credit report. So a couple of the items that you want to make sure that are that you're aware of in what factors affect your credit score is going to be number one, it's going to be timely payment of bills. So when you establish credit, when you have a loan, whether it be a car note or whether it be a construction loan, maybe a student loan, or even a mortgage, or even a rent, if you have a rent at a local apartment complex or whatnot, um, you come into a contract between you and the other party. Therefore, they are expected that you are going to abide by your part of the loan, which is going to pay the bills on time. Now, you can pay more if you'd like to, but you want to make sure that your payment is going to be um, presented in a timely fashion, right? You want to pay your bills um, every month, whenever they're due. Make sure that you pay them at that time because if you do pay them on time, it's going to help you establish good credit because that longevity of good payments are going to be there for you for longevity of credit. If you start missing a payment or you're not paying these bills on time, then you are going to um, start developing a history of negative payments. And what's going to happen is that's going to start affecting on your credit report, and it's going to show up in your credit report, and it's going to start affecting your credit score. So you don't want that to happen because payment history is 35% of your credit score. Now, your overall credit score is broken up into different factors, and 35% is your payment history. So you want to make sure you are paying your bills, whatever bills they are, on time in a timely manner. Now, another item that affects your credit score is going to be your credit card balances and your credit card utilization. For example, I was actually speaking to a gentleman earlier today and giving him the example of a credit card. So let's say you have a credit card, and I'm going to say that you have a 10,000 limit credit card. Let's just say that that's what you have. So your credit card balance, whatever you use for the month, at the end of the month, it's going to get reported to the credit bureau. For example, let's say you use $8,000 of credit on your credit card. Now you're still under the limit, which is good. However, now you're being reported that you're using 80% of your credit card limit. And 80% is actually a high number when it comes to what the bureaus are going to report. Now, you're not, as far as a credit card company, it's okay, but however, you're exceeding what is going to be considered a good utilization rate. So a good utilization rate on a credit card should be 30% or less. So if you use, let's just say $9,000 or $8,000 on your credit card, well, you want to make sure that you bring that down at the end of the month, at least 30% or lower, which in this case, a $10,000 card is going to be 3,000. So you can use the card as much as you want. You can use it, pay. But at the end of the month, make sure you're under 30% threshold. And if you are, let's just say you carry a balance of $2,000 on a $10,000 credit card, that'd be great because you're going to be under that threshold and it's going to start building up good credit. If you are exceedingly over 30%, let's say your balance every month is 7,000 and then 8,000, then 7,000, 6,500, then 9,000, you keep fluctuating on the higher end, it's going to show your utilization rate really high and it's going to affect your credit score. And even though you may not have missed a payment, what you don't want to do on a credit card, do not miss a payment. Even though you may not miss a payment, your utilization rate is high, and that is 30% of your credit score. So your utilization rate is 30% of your credit score. So when you use your credit card, try not to max it out, and at the same time bring it down every month, because once a month it gets reported to the agencies, and they're going to continue to build this history that you are exceedingly over and over that threshold, and they don't like that. And over time, when you try and get another loan, they're going to see this history of you exceeding that threshold of the 30%. So that's your what's called your credit utilization. And then also the credit card balance. I mean, that's another thing. If you have a balance of a $10,000 credit card, do not go over. Do not go 11,000 on your spending, or 12,000. For a fact, they might not even let you, because they'll be able to cut that off. But you don't want to go over, and just keep an eye on your credit cards regularly. Make sure you're under that threshold. And if you do go over 30%, just bring it back down at the end of the month. Now, another factor that affects your credit score is going to be the length of your credit history. So, this actually is very important, because the length of your credit history is 15% of your credit score. So let's say you've been around for a while, and you have developed you've had a car note, you've also had maybe an RV note, or you have a mortgage, and over time, 5, 10, 15 years, you've established this credit history. And if it's good throughout those years, that's going to be great for your credit score. At the same time, if you um, have a long history of bad credit, then that's going to be bad for you, obviously. But now, as a younger person, if you're just coming out of college, or you're just new into this whole credit world, um, you haven't really developed a long history of credit. So do you, so you want to just be able to wait for some time. You can over time you'll be able to develop that history, but it does take a little bit of time once you're on the younger end. But if you just keep at it, persistent, be good at your question, at paying your bills, be good at keeping your balance low, then eventually you're going to have this history of longevity of credit, and that's going to be 15% of your overall credit score. Now, another thing is going to be the type of credit that you have. Now, there are a few different types of credit, and some of it is going to be called like a fixed credit. Some of it is going to be based off a credit card, because a credit card, it's going to fluctuate, right? If you use a credit card and you're you're using different types of you're just spending it differently every month, then your payment is different, right? One month it might be $300 payment, the next month it might be 250, the next month you might have 400. So you're fluctuating based on your balance. That's one type of credit. Another type of credit is going to be a fixed credit, which is going to be something like a car loan. When you go into a contract with the company that's lending you money to buy the car, it's going to be a fixed credit for, let's just say, for example, a $400 um, monthly payment on your car loan. Well, that's what is a different type of credit, because it doesn't fluctuate. It holds at that percentage that you agreed to, your interest rate, and every month you're just going to pay the same amount every month, and that's a different type of credit. And not only that, it's going to also, there's another with like a mortgage credit, a mortgage. It's also a fixed rate. So those are those different kinds. And then the third one is going to be like a charge card, like an American Express Gold or some sort, where you have to pay the balance every month. That's a different type of credit. So just be aware there's different types of credit out there, and you want to have a good balance of a few different kinds, because it helps grow your credit report, and knowing that you can handle these different types of credit. So, but at the same time, you want to be careful. You don't want to exceed what you can't handle. Now, another type of item that affects your credit score is the number of recent inquiries. Again, I literally was speaking to a gentleman this morning, and he went to a department store, and they pulled his credit, and so that was going to be that's like a hard inquiry, because they were looking at his possibly getting him a loan. And then so about a few weeks later, he went to a car dealership, and the car dealership noticed that he had been trying to get credit at a different location, and so you have this multiple, you've been trying to get loans in a short amount of time. It doesn't look really good to a lender, because in their eyes it looks like you're desperate for credit. So if you keep applying for several types of credit loans, where there be a credit card or a department store or an auto loan, if you apply for several at the same time, with a short amount of time, then it's going to be a red flag to the next one. And so at that point, you want to make sure that you don't apply for too many items at the same time. Make sure you've spread it out. So if you've applied for a credit card, let's just say this coming January, don't apply for another credit card until maybe 5, 6 months down the road, because too many acquisitions, too many applications at the same time is going to bring up a red flag. When you go to really try and get a loan for someone else, they're going to see that you've been trying too many times, and then you look desperate, and they may be skeptical as far as wanting to give you a loan, because it looks like you're just trying to find somebody to give you a loan. It's not really a good idea. So those are the key elements. Those are the 5 elements we kind of went through. Timely payments of bills is one element that's going to affect your credit score. Your credit card balances and your credit card utilization is another way, that is another means that's going to affect your credit score. And then also the length of credit history affects your credit score, and also the types of credit, the different types of credit, and the number of recent inquiries. That's going to affect your credit. So I know there's a few of you on chat, and I appreciate you watching this little episode. So what my channel is all about is credit and finances. If you go back to my channel, you'll see I got several shorts. I like making shorts. There's a lot of little nuggets about credit history, finances. I'm starting to do some live videos. There's a few live videos at the same time, but we're really trying to focus on helping you, my listeners, my viewers, to understand what credit is all about, how to maintain a good credit score, how to be financially responsible, because it's very important in our lives. Actually, one of my clients called me the other day because she needed help on her credit report to get it cleaned up. And also, she was trying to get an apartment and didn't realize that the apartment complex is now checking not just your background to see if you're a criminal, but checking to see if you have good credit, because apartment complexes are being a little bit more strict on who they allow into their complex, because they want to make sure that you have the ability to pay your rent. So that's becoming more common, and I'm getting a lot of people coming to me so that we can help them with their credit, fix their credit, and we do have programs that we can um, help. If you have bad credit, or if your credit is struggling, you're not really sure how to build back up your credit because you're trying to get a car or a vehicle for you or your family. Maybe you're trying to buy a home. We definitely can work with that, work with you, and check your credit. We can check your credit report. And if it's a low number, we can get it up to a high number. So that's something we can do, because I always tell my clients that even though you might have bad credit, or you're struggling with good credit, it's repairable, right? Everything's repairable. We can fix it. It can be fixed with diligence, with patience. It can definitely be fixed. And so if you need help with your credit, message me down below or see my website. You can get a free ebook. I have free ebook for my watchers and listeners. And also I do consultation, and we do help people build up their credit and their credit score. We take a look at their information and find out what we can do to help them. So if that resonates with you, then look me up on my website and come back to my channel. I appreciate all that's watching and those that are here just to learn a little bit about information about credit, and also your credit history, your credit profile, and finances. I'm not really an entertainment channel. I'm a channel that likes to just teach information to the watchers and viewers, and that's someone like you. And I appreciate your time. I know you can go anywhere else, but I thank you for watching this. And um, at the end of the show, we're almost done. I would just ask that you would just like and subscribe. Go back and watch some of my other videos, and then we'll do another live stream tomorrow. And if not tomorrow, then on Sunday, and then we'll come back and we'll also just continue this conversation. I got a lot more topics that I want to talk about. We barely just hit a little bit today, and that topic was what factors affect your credit score. And I have a laundry list of other items that I want to just share with everybody out there so that you can learn how to safeguard your credit. Take a look at your credit, make sure it's in good standing, because if it's bad, it's going to hurt you in the long run. But if it's good, it's going to provide a lot of benefit for you and your family in the future to make purchases. Like, you'll have purchasing power with good credit, and you're limited with bad credit. So I hope this helps you out. I hope that this is just a little good Friday afternoon nugget before the weekend. And thank you again for watching. I really appreciate your time. Make sure to like and subscribe and come back next time for some more information on credit tips and solutions. And I thank you. Hope you have a good night and God bless you.